Today I'm going to go over how last night I was able to trade NQ and make 7 risk reward, taking 2 winners and 1 loser trading this exact strategy. Let's get straight into it. So first off, before I go through the trades, I'm just going to say real quick, there haven't been as many trade recaps recently just because I've been very sick. So a little bit tired on that end, and so I didn't really feel comfortable really recording too many videos. But nonetheless, let's get straight into the trade recaps. We're back now. So the first trade here was just off an origin. So if I go in replay mode real quick here, so we can go back in time. This was the first trade, which is off the origin here. If you go to the higher time frame, this is what I was seeing. On the 30-minute, you can see there's nothing there, right? But if you just go to the lower time frames, I believe this is the 5-minute or 1 minute. Was indeed the 1 minute. So this is how I was seeing structure on the 1 minute at this point in time. I was seeing us creating this high. This is a low externally. This new external high, because this low, technically this low here, made this new high. So this is the higher low, higher high. And then now I'm waiting for price to come back here and go higher, essentially. That's what I was looking for in terms of bias here. And in this case, obviously it failed. But today is a perfect example of how you can have a wrong bias and still make a lot of money trading the strategy. The reason why is because my strategy that I teach y'all is high risk reward trading. So all of our trades, our winners are 3 to 4 times bigger than our losers on average. And so we can afford to take wrong directional trades and still come out green overall. So this first trade was off the origin. Again, extreme PY here, marked by this candle here and this low. This is the origin here that I was looking for price to, again, bounce from when we get a confirmation entry. That's what I got here. And in this case, I took the IFG setup here. So here is the IFG. For those who are wondering, I'll mark it here for you guys real quick. There is the IFG, and it ultimately failed, right? We closed above, entered, and it failed, but there's not much you can do here. Now, I did mark here on my chart that you could have went break even. Why? Because this is a bullish candle, and you guys know I take opposing color candles as my internal structure. This is my mechanical way of identifying internal structure. So just following the bearish and bullish candles as pullbacks. So every time we have a bullish candle in a bearish trend internally, that is going to be my pullback. Otherwise, no pullbacks, because if it's bearish candles, it means it's not a significant pullback to me. It's just how I like to personally identify internal structure mechanically. Some people have it many different ways of identifying this, but I think this is the best way to keep things as systematic as possible. And so because of this is the internal pullback. So this is the internal high here internally. And so once you take that out, you could have went break even here. Now, am I going to break even after I'm in only like 0.5-ish in risk reward profit? Almost always no, but it does depend on where you entered. Like if you entered down here, then yes, for sure. You probably could have easily went break even, because I mean, this is already like 2.83 risk reward. But unfortunately, because I entered here on the IFG, not much place to break even. I just held this trade because I was anticipating us to go higher off this, like an A setup. We didn't sweep liquidity, so it's not an A+, but it's an A setup, and we never got it, so that's all it is. It's all good. So let me just delete this marking real quick. This is the first trade, took a loss. Second trade, off the 30-minute demand. So if we just go through 30-minute here, you can see we have a 30-minute demand here. Now, why did I mark this specific area? Well, the main actual 30-minute demand is here. But like I tell you guys all the time within the course modules, if the demand is this massive, you want to refine it. So this is when we go to a lower time frame. You can go to 15-minute. 15-minute, I don't see anything here. Let's go to the 5-minute here. Again, on the 5-minute, you see this here, and then you also see this here. And so this did not get hit. So on the 5-minute. So then we go to the 1-minute. And what do you see on the 1-minute? We do see this. Now, keep in mind, there's tons of imbalance below. So that's what I had in mind as well. I was knowing we are in high time frame demand, but on the lower time frame, it's all imbalances that are most likely going to get filled later at some point. So that's something I was cautious and kept in mind when I was trading this. But again, this is the initial mitigation of the 30 minutes, so it's still important. And another bonus we have for this trade also is because we have, I believe this is the kill zone low. Yeah, this is the New York session kill zone low. And New York session kill zone lows work extremely well. Give the indicator a few seconds to respond here, if it can. Let's see if it does. There it is, New York session low. So we swept liquidity, tapped to the high time POI, and we refined it on the 1-minute. This is high probability A+ setup to me here. Even though, as you can clearly see, later the trend was down, right? My direction was not entirely correct in terms of the expansion I was looking for, which would be something like this. But that's fine because we still made a lot of money because it's high risk reward trading. So here, all I took was my OB entry model. You guys should be very familiar with this entry. Very straightforward. There's the entry limit order here. Again, stop loss, cover a few ticks below. For NQ, you probably have to give a bit more ticks for stop loss space, just because it's a lot more volatile than ES. And how to TP here? Well, remember, always switch time frames until you find something clear. We have a 30-minute here, which is the, if I mark it more correctly, precisely for you guys, this is the 30-minute buy to sell right there. If you go to the hourly, there's also an hour, 1 hour PY right here, which hit to the tick, as you can see, and then we boom went down from that 1 hour. So you could have marked the 1 hour as well as your TP, but the higher time frame you go, usually there's less detail, and so sometimes you won't see anything on the higher time frame. So remember sure to cycle through your time frames until you find something that, you know, looks good and can be mechanical, like how I do it. Now this is also a 15-minute, so I noticed we have a 30-minute and 15-minute overlap with the 1 hour, and the 5-minute also has a very nice refined PY, so that's where my TP was. Where else can you TP on this trade? You can also TP at this buy to sell right here. This is initial mitigation of the 5-minute supply. You can also TP here, but you can clearly see there was no entry model given at all to the downside anyway. So if I was in this trade, right, and I wanted to TP here instead of where I actually TP, which is the 30-minute, I would be looking at how price reacted here. And how price reacted here would tell me maybe I should just close that early. So if a price like gave me confirmation to go to the downside, I probably would just mainly exit and think about taking this short. Otherwise, I hold until here and then look for my shorts later. So you can see this was a 6.85 risk reward trade, and it worked out very nicely. Again, this is the premium discount. There's two different ways of running a premium discount. There's the very simplified way and there's the advanced method. The simplified way is just the most obvious swing point, high and low, that broke structure or whatever that you deem is very obvious. It's very, most times it's very clear. There's not much mechanical system right behind this. It's just marking 50% of the range. The advanced method is finding inducement first. So for me, inducement would be here. And then you would find the next PY right above inducement. So basically this 30-minute here for me, it looks the most clear. So this would be 50% using the advanced method of marking out premium discount. But using the simple method, it is just this entire range. Nonetheless, point is the TP was still in premium, and premium is where you're shorting if your bias is short. So at this point, you know, something else I did realize too was that we did already mitigate the 1 hour here. So this is, we can mark this entire thing, or we just mark the sell to buy or buy to sell here as a 1 hour here. I did notice we did take out also this low here, which is why I was initially bullish biased, because we took out a low in a high time frame when we are bullish. I think we hit it to the exact tick there, yeah. So that's why I was honestly leaning bullish here. But in this case, we did fail basically twice. Or technically once here. We failed the origin here, which honestly should have held. If you want to consider new value, you can consider this structure here as the first failure. So we made a new high here, then we failed here. Why? Because, well, we swept this low, so we should be going higher now from here if you want to go higher, but we continued dumping and we failed twice. So you consider this the first failure and this the second failure. So there's different ways of seeing this from a perspective, but if you're unsure about direction, I just say just trade both sides of the market. That's the best way to trade if you are unsure about your drawn liquidity. So that's what I did here. About 6.85 risk reward, very good trade. TP'd at 30-minute, and this 30-minute again, you can refine it off the 5-minute. And then the initial entry was here. So if you use my indicator here, you see initial entry was here off this IFG label right here. Again, the indicators literally do everything. If you want access to them, link down below in the description on my website. But this would be initial entry. You could have caught a really nice 5.3 risk reward off the initial entry. I missed it, and so, you know, later when price came back, you just have to be patient. It's a game of patience here. Whenever you miss trades. So when you miss a trade, you got to be patient. Wait for the next entry model. This was basically the internal change of character right here. You know, if this was going to be a stop hunter, we should be doing something like this to go higher. If this was a fake out, but no, this internal change of character did not hold, or this sweep did not hold. So it's an internal change of character. We went way further past where my stop loss would be for a sweep, because usually if this is a fake internal change of character, meaning we're faking to the upside, usually see like a wick or two 1 to 3 candles is the count I usually backtest based on. This is way more than that, and it's gone way past where my stop loss would have been anyway to the upside. And so this is very high confidence. I was willing to take this short here. And what did I take? Well, there's different ways of entering this. This is basically your internal continuation, if you want to call it that. We have a PY right here. So that's what I did. I set a limit order at this OB, to be more precise. And I covered both OBs because you see we have another OB above. Let me just hide the indicator so it's easier to see. We have another OB above. So I wanted to cover both just in case we did decide to mitigate, fake out, mitigate, and then go lower. This is definitely possible. This has happened before in the markets from experience. This is definitely possible. And so I didn't want to get faked out there. So I covered both. Ideally, short in hindsight, you could have just covered this and you would have been fine, barely. But I was okay covering both. That's the first way to enter. The second way to enter is waiting for this high to get swept. So this is your internal sweep here, right? And why is this your internal sweep? Well, because this is a bullish candle, so it represents a bullish pullback, and we made a new low. So this is your internal high. We wait for it to sweep, take the stop hunter here essentially to take an internal continuation. This is not a stop hunter setup. So I have 2 stop hunter setups I teach y'all. The first one is when you're anticipating a PY to fail, like this. Because this low made a new high, you sweep this, you go long. The second one is just taking continuations. So if we have something like this, and let's say you're trying to take a continuation short, this is supply zone you're anticipating to actually hold, right? This is your internal sweep here. And so you wait for this internal high to get taken out, you enter, and then, hold all the way through, essentially. So that's basically the trades there. And, you could have got better risk reward here, taking internal sweep. Stop hunter, why? Because your stop loss for a stop hunter is always covering prior to mitigation or some sort of PY if it's extremely close. Again, you could argue you can cover both here as well, but after I see this internal sweep, you can also just cover prior to mitigation here and be more safe about it. Because without seeing this first, price could just immediately in one candle mitigate this PY, right? But if you see something like this where it's a wick, you have space to place your breathing room for your stop loss. And so this is okay here. You enter here, and then you get a nice 3.2 risk reward. Where's my TP here on this trade? It was very simple. Something in discount, right? Again, mark your 50% tool here. Very straightforward, as you can see. And it's in premium or discount here. This is a 3.2 risk reward if you want to take this internal sweep. Otherwise, what I took was just a pure limit order off an OB continuation. So if I just go back here, should we go back? Yeah, this is the trade I took here. Yes, you can see later it did run enormous risk reward, 5+, but there's not much I can do there, to be honest, with trading probabilities, because what I was looking for was this as a mitigation cycle. So I was seeing price potentially mitigating 30-minute, coming back down here, and then going higher, because my draw was still at this time potentially higher. There's still potential to go higher because of this sweep on the very far left that we took out, and we're bullish high time frame, and we took out previous day low when we're bullish. But you can see we never got confirmation. This is why you don't always blindly limit order. We never got confirmation. Price just went straight through. Even if you're on the second time frame, there's no confirmation here at all to enter the opposing direction. And so you would just not have basically avoided this loss here. And at this point, when price came all the way back down here, I was not interested in long anymore. I was like, what I was looking for, if price wants to trend, it will trend. So a lot of times when you see price trending, it will create either new value, new inducement, new PYs right below inducement, or it will come back to just flips instead of all the way back down to origin. Think about it this way with price. If price wants to trend, it wants to trend and reach its objective without as many people as possible, right? The people that are controlling the market, that have the most money in the markets, they want to get to their position, get to where they want price to get to, and exit as soon as possible without as many people on their side, right? For someone to be buying, they need sellers of the equivalent value or volume. And so if someone has a lot of volume or trading a lot of contracts buying, they need a lot of people selling too. They don't want a lot more people buying with them. They need people on the opposing side. It's like a zero-sum game in a sense, if you want to think about it like that. And so that's why when price trends, it should be treading and holding this. But it failed here, so I wasn't really confident. Once I saw we didn't get any type of confirmation here, it was just straight dump through. And down here is just like very low probability we're going to go higher from that point. So those are basically the 3 trades I took on NQ over last night. Hope you guys do enjoy today's recap. Again, if you want more recaps like these or in depth, please leave a like, subscribe, turn on notifications so you guys don't miss streams, you guys don't miss new trade recaps. Again, these are completely for free for you guys on YouTube. But if you guys want to learn my entire strategy from A to Z for completely new trading also, feel free to check out what I have on the essentialtradersuniversity.com, link down below in the description. And I also have the free Discord server down below as well for you guys to check out and join the free community. So hope to see all of you guys in there, man. Peace.